In this video, I'll discuss Q1 FY26 result and Concall of Emerald Finance. So, Emerald Finance is a NPFC. They have mainly three business segments. One is they are a direct selling agent of gold loans of big banks like Axis Bank, HDFC Bank, then SBI. Okay, that is their first business segment. Second is they have a subsidiary soapbank.com. Through that subsidiary they lend business loans. Okay, that is their second business line. And the third is EWA. EWA means early wage access. EWA is pretty new in India, pretty unpopular in India, but if you go to the country like USA, in European countries, EWA is pretty much popular. Okay, so EWA is pretty much unpopular in India. So what is EWA? It is early wage access. It means that let's say I am a corporate employee. Okay, so I get my salary in the first of the month, mainly in the first week of the month. Okay, then let's say after 15th, after 28th, some emergency occurred, or like I want to buy something, some electronic device or something, so I need some cash flow. So what can I do? I can go to Emerald Finance and ask for a EWA. By that, let's say if my salary is like 50,000 per month, so I can take advance salary from Emerald Finance. Okay, advance salary of like 20k or 25k kind of salary I can take from Emerald Finance, so that I can fulfill my will. So in the next month I will get 50k minus whatever I withdraw from Emerald Finance, like 20k. So in the next month I will get 30k from my employer. So how it is like that? So how Emerald Finance earns profit from this segment? Like if I am withdrawing like 20k, Emerald Finance will charge me 2%. Okay, so out of 20,000, they are deducting a fee of 2%, like 400 rupees. Okay, 400 rupees they are deducting, and that is their earnings. And I am getting like 19,500 kind of money. And the next month Emerald Finance will get the whole money from my employer. That is why if you see, EWA is pretty much secure product, because only way they can acquire, there can be a NPA, is like if the employer get default on their employee's salary. So that is the point with EWA, that it is pretty much secure product. So that is the point. And I hope you understand that how Emerald Finance earns money from this EWA product. But if you see their commentary, they are always saying one thing, that they are using EWA product as a cross-selling agent. Okay, like I am giving some example. Like they introduced EWA product 1 or 2 years back. Okay, but now they are introducing personal loan. Now they are introducing bill discounting. Like they have launched their personal loan segment also. What they are doing in the personal loan, like EWA product is what? It is like a short term instrument, like 15-30 days kind of product. But now they introduced a personal loan, which is like 9-month loan to the pupils who have like who have EWA access. They are giving those EWA clients the personal loan for like 9 months. Okay, they are doing 9 month loan for now, but the thing is that uh, the repayment is coming from the employer, not the employee. So that is another good thing, that the structure is same as like EWA. In EWA case also they are getting the repayment from whom? Employer. And here also they are getting the repayment from the employer. Okay, so that is the point. But one thing is unclear, that if the employee left the organization in like 4 5 months, okay, then the rest of the repayments will be paid by whom? That is the question. That is unclear thing for now. I think that in the next con call we will get an answer from the management. So that is the point. That is a one point. There is a question mark, but the personal loan segment is similar to EWA product, but the difference is what? That the personal loan is more bigger in amount. Like EWA product is what? 25k kind of ticket size, but in personal loan that should be around 60k 70k kind of a range. And the difference is in the repayment time, because EWA is like 15-30 day product, but personal loan is kind of a 9 month product. So that is the difference. And that is how they are cross selling their product to the customers. Like they are acquiring the customer from EWA, and then they are giving more to the customer by another product. Because if you look at their EWA product, they are getting what? They are getting 2% out of that as a revenue. So let's say they are as their guidance is like 15 crore by the end of FY26, they will get what? What kind of revenue they can generate? They can generate around like 30 lakh per month. It means that 1 crore per quarter revenue they can generate from EWA by the end of FY26. But now if you look at the revenue number, that is at like 7 crore mark. So in terms of the revenue, EWA is pretty less, because as I said that at the end of FY26 from EWA they will generate like 1 crore revenue per quarter, whereas their full revenue is overall revenue is 7 crore. So that is the point. But the thing is they are acquiring new clients from EWA product. And another thing which is pretty impressive, that if a customer applies for EWA, they are applying for every month. That is another good thing. The retention rate in EWA is pretty high. If you see like 80, I think it is around 80 to 90% kind of repeat rate. So yeah, it is 80 to 85 kind of repeat rate. So the repeat rate is also high in EWA product. And as I said, by EWA product they are cross selling personal loan, they are cross selling like gold loan also. So they can cross sell much more. So that is the point. And another one thing which they are doing, that they started bill discounting. Means that like they are tied up like 100 corporate for EWA product. So out of 100 there will be kind of 20-30 corporates who are like a supplier of big corporate like JSW, Tata Steel. So that can be a possibility. And as we know that if a SME or a company is supplying to those kind of company, the receivable days are pretty high. Okay, like they will get the money back after 3 months, 6 months. That is kind of a receivable days they carry, those small companies carry. So by doing bill discounting, they are also like engaging the company also. Like if the company wants some capital, uh, they are getting, they are like what, like if I have a SME company and I am supplying to like JSW, like Tata Steel, and I am like in this month I supplied 10 crore of raw material to JSW. So JSW will repay the money back after like 3 months, 6 months. So what can I do? I can take the bill, I can go to Emerald Finance and say that I will get that money after 3 months. So give me money, give me some loan, and after 3 months you can go to JSW and take the money back. So that uh, I am availing working capital for me. So that is the thing with bill discounting product. Okay, so that is another way to engage the company also. So email finance in a way not only engaging the employee, they are also engaging the clients, engaging the companies also. So that is a really good thing, that because if we see, customer acquisition is a big thing in anywhere. Customer acquisition is a big thing, but Emerald Finance is doing it in a pretty simple way, by giving them a simple product like EWA. So that is the thing with Emerald Finance, and that is a really good thing, and that is a really good thing. So that is the business model. So let's talk about the result of Q1 FY26. So in this quarter, they registered a revenue of 6.7 crore. They grew their revenue by 53% in this quarter. So in terms of the growth, that is still intact as their guidance is. In terms of the EBITDA margin, they increased their EBITDA margin by 600 bps. So it is a big kind of jump in terms of the margin. And if you look at their history also, for last 1.5 years, 2 years, they are consistently increasing their margins. So that is a really good thing. Okay, in terms of their PAT, they grew their PAT by 87% in this quarter, and their guidance is for 8 to 10x PAT in 3 years, but 1 year is gone. So mainly we can say 4 to 5x PAT in next 2 years. So that is the point with Emerald Finance, and they are going in a right direction. If you see their growth, they are consistently growing at 100%, at around 100%. So that is the point with Emerald Finance. And in terms of PAT margin also, they are getting operating leverage. They are constantly getting operating leverage. That is why their margin is increasing every quarter. Every quarter they are increasing their margin, and that is a really good thing, that if a company can increase their margin profile, so it is pretty good. And in terms of ROE also, they are at around 10 to 11%, but they are saying that they will increase their ROE in next few years, because they will not dilute any stake further. So that is a good thing, that the dilution part is over. They mainly dilute their stake because they want to get listed in NSE in 2027. And like the I mean the what I say, that if you want to list in NSE, then you have to have a net worth of 75 crore, and that is why they diluted their stake. They issued some preferential share uh, to get the net worth to the 75 crore, and they have done that, and they are like in 2025 they are eligible, and the main thing is that one company have to eligible for, like, one company have to have 75 crore net worth for 3 years to be eligible for NSE listing. So in the FY25 they have done 75 crore net worth, and like they have to stay here for next 2 years to be eligible for NSE listing. So that is the point. So no further dilution is there. The incremental growth will come through debt only. So that is a really good thing. And if you see if the debt can go higher, then ROE will be higher also. So that is the thing. And for now, if you see their leverage ratio, that is around 1.25x, and they are comfortable, like they are comfortable to like 2x kind of leverage. So 2x kind of leverage is also pretty low. They can go as high as like 3x 4x kind of leverage, they can do that. So that is the point. But that will take time obviously. But for now they are at 1.25x leverage, and that is pretty low. If you see other NBFC, pretty low it is. So that is the point. They can grow their ROE at a like 18-19% kind of rate. So that is the point. So let's talk about the EWA product in details. So in this quarter they disbursed in June for in June they disbursed what? They disbursed 4.25 crore. Okay, 4.25 crore disbursed loan they disbursed in the month of June. Okay, if you see their March month, they disbursed around 3 crore in the March. So in one quarter they have closely increased their disbursement by 30 to 40%. So that is a really good growth in terms of the disbursement. Quarter on quarter they grew by around 40%. That is really good. So that is the thing. And as I said that in till FY26, by the end of 26, there will be around what 15 crore disbursement number. Okay, so they are going in a right direction in terms of the disbursement, in terms of the EWA. Corporate addition, they added 25 new corporates in this quarter, and they are planning to do 40 to 45 more corporate in the next quarter, Q2. Okay, so that is the point. They have a target of 250 corporate by FY26. That is a pretty big number they are aiming for. I do not think that they will achieve that number, but again the thing is that if the quality of corporate is good, there is no harm to like means the guidance and do like 150 160 kind of corporate. So we have to see that if they can able to achieve 250 number, if they can, that is a really good thing. Till now they have like 90 corporates as of now. So yeah, as their guidance is, they will add 40 to 45 kind of corporate in next quarter. So it will be around what 130 kind of corporate. So from that also in 2 quarters they have to double their corporate number. So that is pretty impossible for say if you look at the this. But yeah, if they can do 170 180 190 kind of corporate, that is pretty good also. So that is the point with EWA. They are going in a right direction, and the main thing is what main thing is that how they are able to cross sell their other product. Like in this quarter Q1 FY26 they cross sold around over 2 crore. Okay, so that is the really good thing, that they are able to cross sell the other products to their clients. So that is the thing with EWA. And one thing I am unhappy with, that in their business loan segment, there is a NPA. There is a NPA of 45,000. But the thing is that they still did not provide any kind of provision against that account. So that is the thing. I am pretty unhappy, because the management is saying they are pretty confident about recovering that money. But even if you are confident with the recovery, but still you should write off those things. You should provide provisions against that account. And because the management also said that those two account is over 90 plus DPD. It means that they are like GNPA. Okay, so that is the thing. I am pretty unhappy with. So the thing is that they should provide for that account. So that is the thing. Mainly there is two account. One is like 3,000 rupees due, and another account is like 40,000 kind of a NPA. So that is the thing. Even if the number is pretty small, but the thing is that you should provide for that account. So that is the thing with the business loan NPA in the business loan segment. But again, if I talk about the management concept is pretty clear, and they are always saying one thing, that they are wanting to go steady. They are not in a hurry to like do anything whatever is available to them. They are always saying that they are in a steady position. They want to grow steady. The management is saying that Sanjay Agarwal always say one thing, that if I want to do, like they have like 90 crore AUM in their business loan segment. If they want to do 180 in one quarter, they can grow their AUM by 100% quarter on quarter. But the thing is that if they are able to collect that EMI from those borrowers. So that is the thing. The management is saying that if they want, they can do, but they do not want to do anything. So they want to go steady, and that is a really good sign, that if a management is looking for a steady growth, in spite of growing at a like pretty high pace and then crashing and all. But yeah, they are doing well. The management is pretty confident about their company, that they are also saying that now we are targeting 250 clients, 250 corporates by FY26. After that we will target like 1000 corporate for EWA product. So when we will register in, when we will entry in NSE, then we will be a big company. We will be a company to stand there. So that is the thing. The management is pretty good, but one thing I am pretty unhappy with, that the provision they did not done in the business loan segment. So that is the thing. But again, the management is pretty clear. If they can able to grow at that pace which they are growing in the last few quarters, they can easily achieve like 4x or 6x kind of PAT number in next 2 years. So that is the thing with MIL Finance. The company is going in a right direction. We have to track it quarter on quarter, quarter on quarter. So that is the thing. And valuations are also pretty low. If you see that Emerald is growing at a rate of like 80, 90, 100%, but their P is at what 30x P, they are around that, and their price to book value is also low, like 3.5x kind of price to book they are trading. So in terms of the valuations are pretty reasonable, pretty I think it is pretty undervalued. But again, the thing is that if they can grow at a pace which they are growing for last few quarters, then it will be a big company if you see. But again, we have to track it quarter on quarter, that where the company is going. So that is the thing with MIL Finance. So that's it from the video. Thanks for watching.